Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Manager. Today is Tuesday, October 12th, 4:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction. As you can see over here on the trend gauge, where we track market leadership, we also track how the indices, the major indexes, 5 of them, are looking across three time frames. Short term using the 21-day exponential moving average, medium term using the 50-day moving average, long term using the 200-day moving average. Market doesn't ever get into serious trouble until the major indexes break their 200-day moving average. Market leadership, neutral, had some good acting leaders today, so we've upgraded the arrow pointing toward bullish, although we're sticking with neutral because of the weighing down of the indexes. Remember, 75% of stocks will track the overall market. And you can see short term here, we're in a bearish downtrend. Arrow pointing toward neutral for mid and small caps, which are really holding up much better than the large cap index, is complete opposite of what we've seen going back through the summer and into the spring, where the big cap indexes were dominating. Medium term, neutral pointing toward bearish, as we can't get back above the 50-day moving averages, not even really close to it. We're falling further away on the big cap indexes while we're in a consolidation with the mid caps and the small caps. Long term, still above the 200-day moving average across all 5 indexes. So what happened today? Leaders very resilient, strong outperformance. However, the big caps continue to be weak. This is the 4th straight day that the last hour of trade has been very bearish, closing near the lows of the day. But as far as leaders resilient, you can see here the G5. This is an index that we track of 5 growth ETFs. It was up 1.05% today. Looking at my screen, it was probably 75% green, and I'm tracking growth stocks on that screen for the most part. So green on the screen from a growth department, really shaking off what's going on the indexes. S&P 500, meanwhile, down 0.24%, NASDAQ 100 down 0.35%, Dow down 0.34%. Here's your relative strength, continues to be mid caps up 0.58, Russell up 0.6%. So let's get to some market facts and then into the charts. But first, let's take a look at the team here at Revere. We are an active manager we strive to participate in uptrends and protect the downside during severe bear markets. If you're interested in this approach, you can contact any of us. You can email Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Let's dig up the market facts here and carry them over into the indexes. So as I mentioned in what just happened, leaders resilient but big caps weak. Let's take a look at the Dow Jones the S&P 500 is what we'll look at first. And you can see here, so we had a gap up last Thursday, which was primarily due to the fact that we were having coming up to a crisis with the debt ceiling, and that was averted. That was a gap up, closed near the lows of the day, right on the 21. You can see the declining green line. That's our short-term 21-day exponential moving average. The red line, which is now rolled over and is heading lower, that's our 50-day moving average. The purple line is an 8-day. We got above that, but we broke back below it yesterday and a second close below it today. None of those things are positive in any way, shape, or form. You can see there's the 200-day moving average, which is another 4.6% down, still uptrending higher. So we're back into this chop area. Let's take a look at the NASDAQ 100. This had, again, the gap up on Thursday, but right into the declining 21-day exponential moving average. You see a lot of leaders top this way when they first break it and rally back up into it. This is the second time now that we broke below, tried to get back above, and only to run into a brick wall. So until we get back above this and we can turn the slope of this line positive, we're really facing headwinds in the market. Dow Jones Industrial Average sorry, clicked the wrong link here. Dow Jones Industrial Average, you can see here, ran into the 50-day. Two closes last week above the 21, back below it over the last 2 days, and it is still trending lower, only 2.5% down to the 200-day moving average. But note the relative strength over the last 3 weeks on the Dow. You normally see that when you see weakness on the NASDAQ relative strength line, and I'll point that out right here. So they're moving complete opposite. This happens all the time when you've got one headed higher, the other one is usually headed lower, and it's because of a risk-off mentality. Let's look at mid caps first of all here. Again, we're seeing the relative strength here on mid caps, and they're in this range. All these moving averages are bunched together, but they're flat. When moving averages are flat, they really don't provide as much resistance or support. We really need to get a trend going and change the direction of those averages, and then see if we pull back to them that they provide support, similar to what you see back here. Here's a 50-day moving average that is trending higher. Pull back to it, it acted as support and bounced higher, and then when you finally break it, it's more significant. Right now we're going back and forth around all these bunched moving averages. This is the 8, the 100, the 50, the 21, all bunched together here. 200-day, you can see two bounces here on the mid caps as this is still trending higher. That's as long as they're uptrending, they tend to act as support. Now, what's going to happen here is this is going to eventually approach the rest of the moving averages in the top of this range, and if we break below it, that'll be extremely bearish, because then we can be below it while still in this range, and then you look for a range breakdown. Or if it acts as support, it could push the small and the mid caps out of this range, and that would be certainly bullish for the market. One thing to keep in mind is that while the dollar is a headwind, that's usually a strong dollar is a headwind that usually just applies to or mostly applies to the larger cap multinational type companies that get profits from overseas. The strong dollar is a headwind into those products, but smaller caps tend to be more domestic and get most of their profits from the U.S., and the strong dollar doesn't impact that as much. So here's the IWM, the small caps. You can see we've had a couple breaks below while it's trending higher, but they only ever lasted a day or two. Yesterday I closed below, but now, as I said, with the mid caps, this is coming up higher into the 21, the 50, the 8, the 100. These are all gathering up here. This is where the rubber's going to meet the road. We're going to have to see a resolution of this one way or another. Is it going to push it up into the top of the range and possibly break out, or are we going to fall back below it? Note the relative strength over the last 8 weeks on small caps has unquestionably been trending higher after a very weak period going back through June, July, and finally bottoming in mid-August. So those are our indexes. Let's go to the rest of the facts and see what else we want to discover here. So how we did today, we opened up 0.2%, but then faded, chopped, faded some more. Let's bring up the S&P 500 again, and let's take a look at a 15-minute chart here. You can see here's your gap up, immediately faded, tried to rally again, faded, tried to rally again, faded, and then broke below 43.50 briefly, but closed right on it at the end of the day. Let's blow this out to a 30-minute chart here, because we want to see these other key levels shortly. So as I mentioned, headwinds. Rising rates, strong U.S. dollar continue to be a headwinds, particularly against big cap stocks. Tailwinds for the market. Sentiment, a lot of bulls have turned to bears, and that is a contrary indicator that is actually bullish, and the put-call ratio has been elevated. When it's very low, there's complacency, and you don't want to see that in the market. But so the sentiment is there and the put-call is there. We're just waiting for the indexes to put in a bottom and use those tailwinds to go higher, but we're going to need rates to come off and the dollar to weaken a little bit. Sectors today, on the strong side, real estate, solar, and gold stocks. On the weak side, XLC. This is mostly Facebook and Google, and semiconductors were weak behind AMD and Intel. So we showed S&P down 0.24% while the G5 was strong. Let's go through these G5 indexes. We always start with IWO. This is small cap. This is the growth component of small caps. The small cap half of it. Little lack of relative strength recently, but an up move today. IWN, the value component, is really what has been carrying the small caps higher. So you got IWO. Next up, you've got FFTY. This is the IBD 50 index. Decent day today as it bounced off the 200-day moving average. Really tough day. After it led a few weeks back, gave it all back over the last 2 weeks, bounced at the 200-day moving average. Again, we want to see this just like we see with the indexes, right itself, get back above the 50 and the 21, and have the 21 curl higher. Number 3 is QQQJ. This is kind of like the mid-cap NASDAQ 100. Undercut but reclaimed the 200-day moving average, but resting right on it. Same situation. We want to see this get back above these declining moving averages. ARKK, this is the ARK Funds growth. This is the worst of the 5, trending lower below all its moving averages. There's your 200 up there, there's your 50, and there's your 21. This clearly looks the worst of the. Cathie Wood keeps buying dollar cost averaging into stocks that are in downtrends, and as long as that continues and the stocks don't turn around, this is going to continue to underperform. And PDP, finally, this is a momentum ETF bouncing at the 200-day moving average. So back to the facts. Let's get now to where do we stand with our portfolios? We're less than 2%, in fact, about 1.5% from fully exiting, and this will coincide with us getting down here if we break this 4,300 area. So right now we closed at 43.51. The recent highs that we wouldn't want to get above 44.56. Let's bring the S&P 500 back. Recent high here last week. Sorry, back over here is what we want to get. The recent highs when we ran into the 50-day moving average last time. So that's best case scenario. We get above the 50 and we get above that. 44.37 is the declining 50-day moving average now. Again, we want to get back above that before we can challenge those recent highs. 43.89 here is the declining 21-day where we spent 1 day above it but then broke it. That's really the first thing that we need to do to give the indexes a chance to carry the market higher if we get back above that. Then you've got this 43.75 to 4,400 no man's land. Let's go to this 30-minute chart here. So here's where we broke below. You got your 4,400 area right here where we gapped above, came down, held it a couple times, tried to rally, but then we finally broke it last week. So we were in this area late last week, 4,400 to this 43.75 area. You can see trying after this initial gap down to get higher through this. It's 43.85, 43.75, 43.69, all lower lows, but for the most part, this 43.75, we'll call it in the middle, where we challenged it today, and this was actually the high of the day. We bounced there late yesterday before finally breaking lower late in the day, and then again twice tried to get back above it. So the immediate resistance area is 43.75 on the S&P 500. We're below that now, though, at 43.51. So this 4,300 to 43.75, this is this prior pullback range here, and we're into this chop now. So this was 1, 2, 3, 4, 5 days, and then over here another day worth of chop, and it's really down all the way to 42.90ish, you could say, but let's call it 4,300. Since it's a nice round number, we really need to stay in there, or we're going to see the market get into some more trouble. As I show here, under 4,300 is problematic, and under 4,300, the next area down there is going to be the rising 150-day moving average at 42.71, and then 41.61. The rising 200, I'm sorry, that was the 150-day, and then the rising 200-day moving average here is at 41.61, another 4.6% down. So that's where we stand on the indexes and the key levels that we want to keep an eye on. And that's not opinion, that's just the fact of the market. That's where we are. What has happened recently is this big gap down here on 920. put the kibosh on the rally for sure, as we were trending in here between the 21 and the 50, broke below it, rallied back up, but could not stay above these declining 21 and then the 50-day moving average, and then this gap down, another one on 928, gap up on supposed good news of the debt ceiling, but we have not been able to, every rally has been sold since then, starting that day and over the prior 3 sessions. So now we're back into this big chop area in this 4,300 to 4,375 area. We're going to have headwinds tomorrow out of the gate because after hours, Apple announced that they're going to have to cut back on production because of a chip shortage of their new iPhone. So right now the S&P 500 is indicated down another 0.25% below where it closed, and that's impacting the NASDAQ 100 by 0.33%, and Apple is down. Apple is down 1.2%. So actually breaking below this 140 level, which was we got a little bit of a support from last week, and then the 200-day moving average down at 135. So how about some good news, and that would be some stocks that acted pretty well today. We're still holding AMBA, another bounce off the 21-day exponential moving average, coming back on lighter volume versus this breakout volume here that we had back on 922. So far this is holding up okay. Another position that we have in Palo Alto, this made new highs today above 500. See if it can hold 500 on any pullback. And we also own Tesla, which had a good day today as they reported some good China numbers. We're waiting for their earnings next week, but first close above 800 as it challenged it several times over the past 2 weeks. Let's see what this can do tomorrow. But some other leaders that really continue to act well, and some things that we've got stopped out of and looking to re-enter. Upstart up 7% today. Affirm, AFRM, positive today, bounced off the 8 EMA. Asana, ASAN, undercut but held the 21-day yesterday, bounced higher today. Some serious relative strength there. Hubs had an investor day today, and very positive response to whatever it was that they reported today. You can see it actually ran into 800 before pulling back, but up over 11% today. And really the strongest stock in the market continues to be Net. This thing is just, don't know what changed. Nobody wanted it over here when it broke down. This is where we got stopped out and didn't re-enter, regretting that quite a bit as it's into this 150 area here. Datadog continues to hold up pretty well. It's a member of the 21 over 21, consolidating sideways, relative strength going sideways. Need some strength to get into, come back into the market to propel this back over the 150 area. And in mode up to guidance today, and you can see the gap up back above the 21's a very volatile stock. Look at this, trending nicely, behaving nicely, then all of a sudden out of the blue one day, down 10%, bounced at 50-day moving average, took off like a rocket after that for the next 2 weeks, then this big massive down day again. I mean, it's very tough to stomach stocks like this. Choppy, and then they upped guidance today. So we'll see if that can calm it a little bit, put in a right side of a decent base, and come up with a decent entry point. That's going to wrap it. As always, interested in your feedback. Love to hear from you. I'm on Twitter at @dvandenbord. Email don@revereasset.com. Phone 855-REAL-WEALTH. Let's show one more time the key areas that we're watching. On the S&P 500, we're in this pullback range here between 4,300 and 4,375. As we closed at 4,350, we're going to, as of right now, a little bit of weakness after hours on the Apple news. The line in the sand here is this 4,300 area that we're watching very closely. Thanks again for listening. Wrapping up Tuesday, October 12th. This is Don Vandenbord with Just the Facts. Have a great evening.